Hello and welcome to PreciseAlgorithmTrading.com. It is Saturday, April 22nd. I'll do a weekend review for really it's the update for what happened on Friday, April 21st. We'll start here like we always do. Well, not always, but sometimes I mix it up. But we're going to do a market review, sort of a it's sort of a top-down analysis. It's really the analysis that I do every day, sometimes even intraday, just to see what's happening in the markets. I've got, for anybody that's new, the E-mini futures lined up over here on the left, where I'm highlighting first. So that's the S&P 500, the Russell 2000, the uh, Dow Jones Industrial Average, and then the Nasdaq. And then I've got the 10-year note as just a measure of really inflation, since especially right now we're in an inflationary period. The Dow Jones transports underneath that, the oil contract for crude oil, and then the indexes themselves, the SPX, the DJI, the Russell 2000, and the Nasdaq, just the indexes. Um, so you can actually I don't know. I find the futures actually to be more useful because they show overnight action and obviously before the market opens, the action that happens there. But they're all good. I mean, it's the SPX, the DJI, the RUT, and the COMP are kind of like looking at exchange traded funds where they don't have that overnight action. It's clearer to see. You can see the candles, the spacing between the candles, the gaps that happen, and you can't see that so much in the well, you can't see it unless you turn off the overnight action in the indexes. So that's a little explanation why I do it the way I do it. Your situation, the way you see things, might be different than that, but I like to look at both. All right, so then we've got the daily here on the right, and we got the weekly here on the left, and I've got an indicator turned on that's just colors the candles based on, so I can see really what I've determined is the best way I can see the markets. Bullish for obviously green, and when you get a number of them put together, it's trending. Obviously, we have situations where it doesn't play out that way, but I've got candlesticks turned on so I can see upper wicks and lower wicks when they happen. So obviously that's where maybe a sell-off happened for just a daily candle. Does that mean all that much in one candle? No. But if you look at it in context and you are in a downtrend with red candles, and then you got a pop up and into a green, and then we get a sell off like that, and then a close below these moving averages. And that's a continuation of the sell off. And if you use that within the context of waves, I'm not big into Elliott wave theory, but waves themselves, just to say, you get an impulse wave and then a pullback, and that's usually followed up by another wave to the upside. And just knowing kind of waves and how they work, it's like this one to the downside. That was an impulse wave to the downside, and then a pullback up. You can almost expect another wave to the downside. And if you're wrong, you can set stops above the highs of where those types of candlesticks happen. And if you're wrong, you just get out with a small loss. And if you're right, then you can ride it all the way down. And you can take your profit at these profit target dots. They're not necessarily the be all end all, because you can see it gets above that target dot that I'm sitting on right there. And I'm expecting it to actually go up and take out this old target dot. And why would I expect that? Because on the weekly chart, it's got to, if the daily happens and continues to happen, then eventually the weekly is going to get hit. And it really doesn't matter. I mean, this is just time frame analysis. It doesn't matter if I was looking at an hourly chart versus a daily chart, it would be similar. So there you go. And then I have statistics thrown up here at the top, and I've got a little bit of an arbitrary thing going on with how to count the profit here. Because of the price going on with the different indications, all I did was do a little bit of math and said, let's throw in, if it's a small amount, we're going to use 100 shares at a time, and this is going to show the amount of data that you show here. I've got the time frame right now set to 10 years. But if it's a large amount of data, then we're only going to use 2, because, or I shouldn't say a large price. If it's a large price, we're going to only use 2, because I want to look at, like, if I was going to buy 2 contracts of the E-mini futures, because those are very large instruments to trade. But if I'm on a small contract, like XLF, for example, down here, this is the financial sector. If I was going to actually trade the XLF, I'm going to only buy 100 shares of that at a time. That'd be $3,300. And so you can use any different, you can just multiply that by whatever your account size to be able to do the right size trades in conjunction with the size of your account. And then you can also just see, is it profitable or not? And in this condition, you can see, hey, we're back on green. We've been on green way back here, and we had a big sell-off, which we're all aware of, or should be. And then now we're climbing again, and we're still in a bearish condition on the weekly. Just an example, and I just picked it randomly, but I mean, we can do the same thing with XLK, where it's a $147 contract. And you can see it is profitable over time. That's really all that's showing you. Not everything is. I mean, not everything likes to follow these same kind of paths. But most things do, and that's why I have it built this way. So, all right, that's enough of that. Let's look at the actual market analysis. We'll start with the SPX. We are green. We are in a pullback situation, not that hard of a pullback. I'm looking for it to take out the old highs back here from 2.2, and we are actually in a place where we're vulnerable because we're overbought on the True Momo indicator. By the way, these 2 indicators at the bottom are proprietary that we built, and I mean, they're made up of things that aren't so proprietary, but I combine a lot of things together. It makes them proprietary. So, anyways, we are overbought, and you can see when you get overbought, you can go to oversold pretty quick, and that can be a big sell-off. I can also show you back in history on this chart when you're getting into a new bullish condition. I'm not necessarily saying that's happening, but you can. So you get could be perceived as a major sell-off there, but you go from what was a bigger sell-off to a lesser sell-off, and you can actually see that we're in that condition. It was actually not as deep before it got to be a buy again, and that led to pretty serious buying for a longer term bullish condition, I should say. So anyways, that's, you use a little history and context with all this stuff, and you shouldn't get hurt too bad. But anyways, we're vulnerable to at least a shorter term sell-off before this thing could possibly go higher. But on the weekly over here, we do have a lot of bullishness going on. We are still climbing out of oversold territory into the potential overbought territory, and we got target dots all over the place. So, and then you're going to see that, I think, with all of these indexes. Let's look at the Dow Jones Industrials. There's only 30 stocks in this, but we all know it's one way to look at the market, quote unquote. So, and I'm looking for it to start trying to break out of these old highs back here and get up above 34,250 or so. And this has acted as resistance level. I got it drawn in here, actually. That's just a drawing. But if we can get back up here and break out above that, maybe after this pullback, because we're vulnerable here as well, then maybe we can get this thing into maybe the market will get itself into more of a longer term bullish move. But and on the weekly over here, we're pretty back and forth. We actually have a weekly sell-off signal as of yesterday's close, and that is something to be concerned about, but maybe not, don't gnash your teeth about it, because it could literally just flip right back around again. You get some of that over here. I mean, we've seen it in history over here, just recent history even. And then the Russell, small cap stocks are harder to move in and out of for the big institutions because they're small caps and they don't have a lot of volume to them. That's really the driver, is the volume. And so that makes the bid-ask spreads, which is getting pretty deep into what markets do, makes them wider and makes them tougher. Like I say, that when they're moving, the bid-ask spread narrows, and so the market makers and the big power houses can make more money and not spend as much. But when they're widening, then they have to pay more to get in and out of trades. And so this one's been lagging. And the reason I say all that is because when the Russell is actually leading to the upside, then the market looks pretty healthy. And right now it's not leading to the upside, but it'd be nice if it caught up, because then all of a sudden it maybe could start leading again. And when we see that happen, I think a lot of the noise about recession and everything will be over, and actually far beyond, or will be well beyond all that stuff. And they're still like talking about it all the time in financial news and in actual regular news even. The Nasdaq's really been the one that's been leading the way lately, which is good, because when tech is leading, typically things start to get better. And it's creating this area. I'm going to go ahead and draw something on here. I'll go draw a box, and if you could see this, I'll do it like that. That area right there is buildup, and it's creating a big back and forth. And if it breaks out of this box in either direction, it's probably going to go for a while. So, if it breaks out of this box to the downside, expect to get it back into this type of a zone where price was before, down here around 11. Looks like 11,100. If it breaks higher, then I'd start to see these target dots getting taken out up here around 12,900. So that's really what we're looking for, and it's this back and forth zone. When you get the imbalance at the edges, is really where this thing will take off, because there's a lot of traders waiting with stops up here at the high, and with actually stops and buys up here at the high, and stops and buys down here at the low. And when the imbalance gets way out of balance is when you get the markets going fast in one direction or the other. So that's that. Everything else is the same: green bars, red bars, and the whole 9 yards. Let's look at oil. Oil was up on Friday. I'm going to use the USO contract just because it's about the same. I mean, the action should look about the same as well, let's look at this one too, just to prove it, unless it's going to fight me in technology. And it is. So really, we've had a lot of gaps in the oil market lately. It's going to give me a performance problem. So we've had gaps in the oil market, and this is just not a tradable thing right now for me. So a lot of bearishness going on. I'm going to flip over now to stockcharts.com. We're going to look at the bullish percent indexes, and I'm going to look at the NYA. Down a little bit on Friday. The transports probably flat on Friday, and they are. The NASDAQ up a little bit on Friday. The SPX down a little bit. The NDX flat. And the OEX flat. So not a lot to be gained out of the bullish percent indexes, but nothing really. I think everything we've seen on the regular stock charts is validated really here. It's still mostly bullish until we see a big turn either way in any of these things. That's my analysis, going to stick with that. And then I'm going to follow up finally with our automatic trading systems, and this is the Dow Jones. We took a pretty big haircut on Friday. This one went underwater for the first time this quarter to zero, below zero I should say, but then I ran it on a 12-month chart and it still looks fine. I mean, this pullback, yeah, it's hard to take, and it's harder to take them when I'm trading 3 different instruments and they're stacked on top of each other. And if you get all pullbacks in the same day, it's just, that's why on our website we talk about having, I think it's 3 to 4 times, 4 is recommended for the maximum drawdown so you can weather this. And then I look at this individual trades wise, and this is what Friday looked like, and it was, yeah, that's miserable. But in the scheme of things, when you add all the trades together for a year's period, you know, this is just noise. And we want to obviously get into the period where we're starting to rally. And based on the math, I'm not disgruntled. Then I've got the same thing happening with the Russell, where it's been underwater most of the quarter, and that's aggravating. But if you lay it out for the year, or the better part of a year, you know, we had a terrible time back here as well, and we're having a terrible time here that's just a little bit further drawn out. And then again, Friday's trading on the 21st is more losses than gains, but if you look at it on the long term, more losses than gains here. But if you look at it on the long term, it's really fine. And then the NASDAQ, same thing. I mean, we had a sell-off a little bit on Friday, except it's not the same thing because we've had recent new equity dots to the upside, and that means our equity is growing, and green dots on the equity curve means new highs. So that's great. And in the long term, it still looks great, and we're taking off the new highs. Hopefully we have some move like this. That would be great. And then just looking at the individual trades from Friday, looks like that. So not near as terrible. We had a great trade there on Thursday, and then Friday was still more selling than, or more losses than gains, but that is the name of trading, guys. So then I also did this. I'll leave you guys with this. I ran the strategies through. I was thinking about maybe moving the timing to start these markets earlier, but really for what you get here, this is how the strategies are built. But you know, this one's a little bit better at 9:10, but I want to be consistent, and I ran it through all my 3 strategies, and they all ended up around 9:05 or 9:10. So to be consistent, I'm not going to make the change to 9:10 just for a little bit of gain. I'm going to leave it where it's at, and I just did that to validate where we're at. So I'll leave you guys with that. Hopefully that all helps, and guys, I hope you have a great week next week, and especially in the markets. Take care.